weekly analysis. I know it's been a while. I haven't done analysis on here in a while, but we're gonna get into it. So I'm gonna go into Bitcoin. I've actually been tracking Bitcoin for a while, and I'm gonna just show you guys a little bit of what I've been looking at with Bitcoin. I know this is a little bit rough because I've been in the market all this while, but we're gonna go into a fresh new chart just so we can keep things clean and detailed. So this will be a fresh chart. We can take this whole thing off. Let's just start from scratch. Remove drawings. All right, so this is a fresh chart. We're gonna start from the monthly, just to break things down from the monthly and break it down all the way to the daily chart and see what's going on. So if we start in the monthly, we're going to identify key levels. So these are areas I call key levels in the market. This is like, you can call them like resistance and support. I call them, the same thing, but I mostly use the word key levels. These are levels of interest for me. So personally, I'm going to start from we can start from the bottom all the way to the top, and we'll just start identifying these areas. So we can see one key level right here. You can see another one here. Yeah, we're just gonna take it slow and steady, and gradually it's gonna make a lot of sense. And you can see this one here too. And you can see another one right here. And then we can see another one here. We can see another one also right here. Right, and we can see another one right here. So these areas are key levels to me. These are areas where I've seen the market find resistance and support. Overall, don't mind these two lines. These lines are just my alerts, just to let me know, when to get into the market. But don't worry about this line so it doesn't confuse you. I think I should just take them out for now. Oh no. Okay, let's just take them out for now. I think we'll be able to refresh the whole thing to go back to how it was. All right, so now we got a clean chart. This is a fresh new chart, right? So let's get started on this. So now we've been seeing BTC has been respecting all the key levels, like just starting from, let's go back from 2017 to this is 2017. Bitcoin respected this key level, found support here, seen market broke above here, found support here, rose all the way up to 19,600 and retraced back down to another key level, which was at 13,800-ish. So we saw the market, move into this key levels, like ranging from 20,000 back down to 3,000, and then finding this resistance at 13,000, also coming back again down to 3,500, and finally breaking above 13,800. So we've seen this whole moves happen in the market. Now the market's there making much higher moves, like going on a monthly. We start in the year 2020, the market's there rallying up. So we saw a good 6 months of rally. The market for a good 6 months, that was almost half the whole year. The market rallied all the way up to 60,000 from 13,000-ish. Actually, from 10,000, the market went to 60,000. That's a 50,000 price difference. So let me just, open your eyes to what's possible in this market. Imagine you got in with a one lot and you just bought BTC at 10,000 and you held it for 6 months. You would have made 50,000. If you entered with a 10 lot, that would have made you 500,000. That's crazy, right? So now we want to find how we can catch the next big move. So we want to see this type of rally. We want to make sure we're part of the market when the market starts rallying up again. And that's what I think is about happen all over again. We're about to see another rally that's even going to break past 64,000. So what I see right now going on is we found a level of retracement. We saw the market retrace back, and now we've seen the market start rallying back up again. So the market came back down to 19,000 key level area. Actually came below that, came all the way down to 16,000. Into this range of key levels, we can see the market came here and didn't find the market came into this key level area, this resistance, and came back down, closing below here. So this area is an area of interest. That's how I put it. Wherever you see wicks, the market rejects this area. That's an area of interest. You know there's a lot of supply and demand going on in this area. So we saw the market break past it. It didn't come back to what we call, this is what I call, when the market breaks an area, it has to come back to retest it. So the market broke past its resistance. It didn't come back to retest it or come back to give it its last kiss, like I would call it. So it's just like saying goodbye to your partner, and you gotta come back. Let's say you're about to leave your house and you forget, oh damn, I didn't say goodbye, I didn't kiss her, goodbye. You gotta come back into the house and do that goodbye kiss before you head to work or whatever. It's just the same thing. That's what the market does, right? The market broke out, but it didn't come back to say its goodbyes. So we have to wait for that final last kiss. That's how I can use the analogy to make it make sense to you guys. So the last kiss is what we saw happen here. The market has finally come into this zone to say goodbye. I'm done. Oh, no, I'm done. No, no, no. Not saying I'm done, but you get the point. But it's like your final last kiss. Like, I'm about to go do something amazing for the day. I'm about to go crush numbers in the company, whatever. You're just coming back to say goodbye, right? So the market has come back to say goodbye exactly at this 16,000-ish. He showed us this inverted hammer candlestick pattern here, and we see the market rallied right back up outside this zone. It came into this key level and it bounced right back up, showing us there's a huge area of support going on here. So we saw the market bounce off of this and close back up here. Perfect. So now we know this key level is valid. See, the market broke it and then came back to retest it, also giving it another kiss, like another last kiss on based off of this one's relationship here. So you can look at them as each of them have their own relationship, right? And this one right here just broke out. It broke out the key level and it finally did all what it was doing, but came back to do its last kiss before moving up for greater things, right? So that's how the market moves. So now we've seen the same thing happen here. The market has come into this key level again, which is what we see here. This is another strong area of support. So if you want to put a box into it, sometimes you can put boxes into it just so you can make it a zone and you can understand what's going on, especially with the wicks. So you can do something like this, and then you can box it out so the color is transparent a little bit. So we see the market came into the zone for this last kiss. Now we see something similar going on. Again, we see something right here. There's something similar. We see the market coming into this zone again. This is another key level. The market is coming into this zone, and we have to be careful of what happens here, because this is also another huge, strong area of resistance right now. This used to be an area of support, but you see the market broke below it, and this also looks like the market is coming in for its last kiss, right? It's coming in for the last kiss from this zone because it broke it and it has to come in for its last kiss. So there can be a potential move that BTC can still pull back a little bit just because it's in an area of strong resistance. That is possible too. I won't be surprised if that happens. But what I'm looking for is to just monitor the market and see what's going on in order to make decisions moving forward. So we have to break it down some more. Just on the bigger picture, this is what I can see. This is what I'm picturing happening right now in the market. Then we'll break it some more just to understand more or less what's going on, and we can go with the market trend and find good areas to enter from and protect our capital so we don't be exposed in this market. So let's break it down to the weekly. So actually what I'm waiting for to happen is I've seen a bullish engulfing. This monthly has engulfed 1 and 2, potentially maybe a little bit of this one. It engulfed this one, but a little bit of this one because the week came above here but still closed below here. So now we're waiting to see possibly another retest of this key level. So the market can come back, retest here before pushing up and making its high all the way back to 34K. That's a possibility, but we'll see if we break into the smaller time frames. We'll see what's going on. So now we're going to the weekly. So we're in the weekly now. We know there's a huge area of resistance, this zone right here. We are being cautious with our trades because of we see a lot of rejections happen in this zone. So we have to be cautious if we're going to be taking buys at all. We have to be cautious taking buys from this zone because this is somewhere the market can decide to reject and coming here from a new double top and just bounce back down and maybe come back, test here again and potentially go up. It's possible. Anything can happen in this market. Whatever the news can come up and say Coinbase lost 10 billion of their coins and now people are panicking and everyone is selling and the market can short from there. That's a possibility too. Anything can happen. That's the type of market we're in. We're in the market of uncertainty. We don't know what can happen tomorrow. We can wake up to Coinbase owners running away with all the coins and there's market uncertainty and everyone starts selling, panic sell. But all this news and everything that can happen, potential scenarios of news that can come out and make BTC drop or whatnot, all still boils down to what's going on in the technical analysis. You know what I'm saying? Like, you still got to see a correlation with what can potentially happen here that can make the market bounce back down or make the market continue going up. So either or, it can be a news that will even make the market soar even higher. Like, it can be a news of now the US government has potentially accepted BTC as a mode of payment for flights in, you're about to travel with American Airlines or Delta or something, and now you can pay with Bitcoin. That kind of news can make BTC soar even higher. It can make it keep going up. And this can just make it break this key level. So when trading, you got to analyze different scenarios, got to play out in your mind so you're ahead of the game. That's what I call like having an edge. You're always planning of different scenarios that can play out. So this might sound a little bit far-fetched, like you're just thinking, oh, what if this, what if that happens? But that's the type of game we're in. That's the type of game we're playing. A game of probabilities. And once your own probability is right, the reward can be very, big. It can be something huge that you can make a lot of money from. So let's go back to it. So now we see on the weekly there's this level of resistance. So we see the market came in here, rejected it. We saw a little bit of pullback, which also correlates to a previous area of resistance that we saw here that got broken. So this used to be the area of resistance, right? So this area was an area of resistance which was at 25,000-ish. So at 25,000, that's also another key level that's also another key level that I want to bring to your attention. Is like whenever you see the market moving in even numbers. Like the market for BTC, for example, the market can move at a key level of 48,000, like 48,000 on the dot. And then the next key level you'll be looking for is 49,000. The next key level you're looking for is 50,000, or you can move it in increments of 10,000. Let's say you're looking at the market moving from 10,000 to 20,000 to 30,000. Those areas can be key levels too. You can identify those areas as key levels. You can also identify like the half of them, like the 0.5 of whatever key level you have. So for example, if you're analyzing a key level at 19,000, so I'm gonna use this. Let's say we have this key level here. This is 25,000, right? Then the next key level you can identify can be 26,000 on the dot. So you can look for 26,000 right here. So this can be your next key level. And you also see, if you break it down to smaller time frames, you will see the market is actually playing according to all those key levels, right? You can see what happened. The market came exactly into 25,000. It bounced on it. Now this is 26,000. You can see somewhat of resistance happening here and also somewhat of support happening here too. Resistance right here, you can see that. So you can see overall the market somehow respects all those key levels, like the even numbers and the odd numbers. So right here we have the market respecting this as a key level. This 26,000. Right here we have the market respecting this. This is 25,000. Market respecting this 25,000. Market respecting this 26. Support 26. Support 26. Support right here 25. So resistance right here 26. Then another thing too we can do to also find another level of key level is breaking it into two. So that's just the half of this. Half of this can be found at your 0.5s. So your 0.5s can be like just, I'm just telling you another easier way you can do. You can use your Fibonacci to find half of this key level to this key level, which is 25,500. So that's 25,500-ish. Again. So right. So this is 25,500-ish, right? So we can take this fib out. So at 25,500 is another key level, right? This is the half of these two key levels. So you can see the market also respects this. So now you can use this to track what's going on in the market, like, you know, on a daily. That's why on one of my other, on this, that's why on this one, my chart looks like this. That's why my chart does look like this. You know, this was my previous analysis on BTC that I was analyzing. This is my previous analysis on BTC that I was analyzing, and I was waiting to get an entry right here at 24,000, but it didn't come to my area of entry, of my potential area of where I was planning on taking entries. So it actually got to my weekly key level, but I wanted, I was a little bit greedy, I would say. I wanted the cheapest price to get BTC from, but I actually wanted to get in from here at 24,000 and ride it all the way up to 36,000. That's my potential entry. And I can show you, like, I had this analysis set before. I had this analysis even when the market was currently here at 28,000. I was waiting for it to come down here. I'm gonna look for that and add it to the video later on. Probably at the end, I'm gonna just show a glimpse of that analysis. But back to what I was showing you. So what I was gonna say is that's why I have all those lines here, right? So this might look really, really crowded. Let me take out the fib out so it reduces the lines. But this can look really crowded, but this is how I do it. So you can see the key levels right here. They are the straight, thick, dark lines. So it's the 29,000 right here. And what do we have? The dashed line is the halves. So this is 28,500. You can see the market respects it here also. You can see the market respects it here. The market respects it here. Then down here we have 28,000. You can see the market respects it here. Market respects it here. Then below that we have the halves of it. So we can see also the market respects it here, respects it, respects it, respects it, respects it here, respects it, and here too. Then below that we have the straight dark line, which is also 27,000. You can see the market kind of respects it in and out of here. And below that we have the halves of it, which is 26,500. Market kind of respects it in and out of here and there and here, and so on and so forth. I just didn't put some more lines, but if you keep it going, if you put it at 26,000 right here, same thing. See, market respects it here and here. Find the halves, still the same thing. Keep going again right here at 25,000. Oh, 25,000 is right here. So now what we'll be looking for will be the halves. So the half of this area will be 25,500. So right here, 25,500. We can also see the market respects it also right here. So this is just my own personal chart that I look at. It can be confusing sometimes, but what I do is, in order to make it not that confusing for me, what I do is whenever I want to clear my chart and have a different point of view when I'm in the market, I just simply hide everything. I can do this, I can hide this and just watch what's going on the grand scheme. Or another thing I can do is I can just leave this whole one because I've already analyzed on this one, right? I've already done my analysis on all of this, so I can leave this whole thing and just go into a new Bitcoin chart, a fresh one, and that will help me make more sense out of it. I can just go to this one. So this is fresh without all the lines. Maybe I'm just doing this is the one I was doing with you guys, so that's why there are lines now. So this can be fresh, or I can just delete everything again and this will be a fresh chart and I'll have a different point of view, just so I can untangle my brain from all the whole lines that was on the previous chart, just to keep things a little bit clean and decluster a little bit. But let's go back into what we're seeing in the market, what we see going on. So now we're in this uncertain area. This area of uncertainty, we don't know what's going to happen possibly around this zone, because of we see a lot of rejections happen in the past, and now we know the market is in this area, and we see the market came back down to retest. The market came back down to retest this zone, and as it has tested this zone, it looks like it has broken out from here, retested it. Now we're looking for potential move to the upside, right? So what we can do is, now we've seen this, so we're just tracking this in real time. So we can break it down again on the weekly. I don't see anything else. I know this is the market looks like it's rallying back up because it has a whole 1 week engulfed, like over 4, 5, or 7 weeks worth of candles. So we know the bulls are in the markets. The buyers are more they are emerging into the markets. There's more. Everyone is kind of looking at BTC to keep rallying up. So we have that market sentiment also going on. But we still can, forget about technical analysis. Despite market sentiments and everything, technical analysis is still going to show us what's going on regardless. Before the whole SEC SEC filing a lawsuit, I think, on Coinbase and Binance that made BTC kind of surge more higher. It's like I already knew the buy was coming, right? Because of technical analysis already showed me all that. But now let's go into daily. Let's see if we can find more setups or something clearer. So this, like I said, this area is an area of uncertainty. Uncertainty. This word is so hard for me to say, but anyways. So now in this zone, we're gonna keep tracking it. So let me make this look more like a candle. All right. So now we got this going on. On a daily, we see the market is into this zone. So we're going to see a lot of rejection potentially happen. We can see the market might reject this area just for a little bit until it finds more volume in order to break past this. What I've noticed with BTC is it just doesn't break a key level or a zone just like merely getting to it and just keep pushing on it. It breaks it like very aggressively. It doesn't just come into it and tiptoe his way out of a zone and just keep going. It kind of breaks it aggressively. I'm going to show you guys an example. So now look at this zone. Look at this zone. BTC got into this zone, rejected it, tried to come back again, rejected it a little bit. So what it was doing here was gaining more momentum. It came here, found support, and it had to come back. It tried to break it, couldn't, had to come back. Now use this whole volume, was picking. It's just like a plane trying to take off. It was picking a little bit of volatility, picking it up until it was able to take off, right? Then when it took off, look, it just kept pushing up. There was no more rejection. The market just kept pushing up and it broke past that whole zone, right? Now, same thing here. We see the market rejected this area, came back down. The market tried to come here, but we started seeing rejection. So once rejections started coming in, people started getting scared because they're like, oh, are the sellers coming in or what's going on here? Because we know here's an area of resistance. So this was what cleared the score for everyone. The market rejected again. As the market rejected, it found its support and the volume came in. You see how that wick came back up here? Showed that the buyers picked up more orders from here, came back up here, and now it was able to break past these two zones aggressively. See, it took over this whole candlesticks aggressively. It was able to break past it aggressively. Now we got into this key level again. This another zone right here. The market came here, crept into it. So now we see the market has rejected it. And what do we have? Another week, something like this, that broke this type of key level. We see it happen here. The market came in aggressively, push, trying to take off all these weeks of dropping, of the market dropping. Actually, the market has been dropping for so many weeks, and just a whole week took everything off, right? So that shows there's volatility in the market. That actually spikes our interest, shows that the market has started becoming more volatile and there are more buyers and there's more participants in the market. I would say that's what happens. That's what makes the market volatile. When there are more participants in the market, more people playing the game starts moving more, irrationally and just going all over the place. But now we see this. This gives us hope that there's volatile momentum happening in the market. So what I'm waiting to see is the market to bounce into this zone, this key level, maintain itself in this same key level without dropping below, hopefully, and we can find another volatile candle on a weekly that will push it up again. So we see the market go here and stay resting because the resistance here is crazy. It's a very huge zone of resistance. It's not just something small or just half. It's a huge zone of resistance. So we can break it down again into the daily, like I said. So on the daily, what we can do is take previous highs, right? Previous resistance. So for example, we can take this high. We can take this previous resistance here. And then we can mark it up as a zone. So we have this previous resistance going on. So we are just tracking to see what's going on. Is the market able to break past this previous resistance, this previous highs, the highest highs it has made in the past couple months, I would say. In the past, anyway, actually, in the past, we're past May 22nd, right? We're in June right now, and we're in July right now. So this is this past high. This is highest high in a year. Right? So the market has gotten to this high in a year. This is the highest place the market has gotten to since June of last year. So we want to see if the market has that volume to keep breaking above this high and it's going to keep going up. We want to see if that's possible. So we're tracking it right here with this zone to see what's going on. So we see a lot of rejection here. We see that there's a strong resistance going on coupled with the big resistance we know this zone. So from 35,000 down to 30,000 ish. So a 5,000 price difference, we see a huge area of resistance on the bigger picture. So we just got to also keep that in mind too while trading, just knowing where you're entering from, So what I'm seeing is the market has rejected this area. The market is rejecting this zone. We have seen the market try so many times to break above it, but we kept getting rejection. We see this whole bearish engulfing candle that engulfed 1, 2, 3, 4, 5, 6 candles and closed right here. Now, so the market attempted again to go past it. And what do we have? Another day swiftly brought it back down, making it look more like there's going to be a turnaround here. So we can potentially see this market drop a little bit lower. Maybe it can drop to the next zone to find area of support and get that momentum to break past this. I'll call this the mini size zone. Break past this mini size zone before potentially pushing out of this bigger zone, right? So that's what we're looking for. It looks like something like this, right? You see the market came here, it found the resistance here. It came back down, tried to break it. This rejected it back down. You try to come back up, but no, it kept going down. Found an area of support. Then it now, geared up. It's like it's gearing up for that, volatility. It's gearing up itself, ready to take off. It's just like something going back to go get enough, space just so they can have a huge runway to take off. Something like that. So, because the plane is not just going to drive or, taxi for, let's say, 5 seconds or 7 seconds and take off. It's not possible. The plane is going to crash. The plane has to taxi for a while, get enough room to speed up, get some acceleration, get some, get some momentum and speed into the airline in order for it to be able to be airborne. So this is what happens in the market. So it's just something that makes sense. It's just something that when you look at it, you're like, yeah, this can't just take off from here. It don't make no sense. It needs to have enough room. So that's what happened here. The market came down, found support. Now it has enough room to go. Same thing happening here. Market found resistance here that it hasn't gotten to for over a year, right? now it had, because the market can't just break and keep going. We know is bullish, right? We all knew that BTC is gonna keep going up, because what do we get? We saw this weekly found support. Now we saw a full push to the upside. The market is not just gonna break from here and keep going. So the market had to come back down, find that area of support, which is now giving it enough room in order to break past this previous high right here. So back to the daily, we saw this actually brought it down. So even the steeper the drop of the market, the higher it's gonna go. Because if the market is gonna be very steep, that way you know that that way you know that that way you know that way you know that if the market is going to be very steep, that way you know that you're going to be able to that way you know that you're going to be able to that way you know that you're going to be able to hold on, I'm gonna call you back. I'm in a session right now. I'm gonna call you back. So that way sorry about that, guys. So that way you know that the market is going to have a volatile momentum coming in, because it has more room to take off and go as high as it can. So this is like you want to be looking at this as your runway. So this from here down here, you want to be looking at it as this is the whole runway in order to take off. So it's like the plane is speeding up from here, and then it's going to take off, right? Something like that. So now we know this is potentially going to get broken, but we go here again and we are still facing a little bit of resistance. So we're going to get a little bit of pullback, just a little bit of pullback to find that momentum to push above. So we're going to find potential areas where we can see this pullback, right? So now, for example, this is another potential support. So here, this can be classified as support. Another area of support where we should be paying attention to. And also here too can also be another potential area of support. So this is also where we're looking at. We're watching these areas too, and also this key level. So if we see the market come into here, which it has done, tested here, and the market came up here, you see it has tested these two areas. We've just been playing around in this zone. So we need to see the market deep, then find that push to the upside, right? So what I'll potentially be looking for is, I'm going to see on my actual support and resistance, where's the market potentially going to come into before moving up. And also we'll use this tool, Fibonacci, which is also a great tool. I use it a lot. And we're going to see what can possibly go on here. So this is what I think. Fibs from here to this high. So we have 38.2, which is here. This means a fast retracement. So it means the retracement is not going to be too steep and it's going to happen fast. So if the market comes into this zone, so this is a potential move. If the market comes into this zone like this, we can see this happen. And we can potentially see break out of this zone, right? And that can be logical. This can make more sense. Or we can see the market still deep a little bit into the 50 area of the Fibonacci, which also supports the this area of support right here, right? So you can see there's an area of support here. So this was an area of resistance. The market broke out of it. So we have to wait for that last kiss. That's that last kiss I'll be talking about. The market has to come back in here and say goodbye to this zone because it broke out of it, and it has to, give it its last kiss. And then we potentially pull up again up here, right? So that's a possibility too. Yeah, let me just put this on, try and get it straight, but well, cool. So that's another potential possibility that can happen. Another one that can also happen is a steeper retracement. This is when I think the market is still trying to make a decision on its direction. Sometimes this might make it take a little while. It all depends on what news comes out or what the sentiment is about Bitcoin in the meantime and all that jazz. But this is another potential move that we can see happen in the market. So we can see this also go on. We can see the market So all these lines I'm showing you from here, this means from the current market, right? You see the market is right here at this peak, at this area. So that's why I'm drawing these lines from here, because I think we're gonna see a drop before a push. So we're gonna see another drop before a push. Potential analysis in the market. So another one we can see is we can see the market drop all the way down steep into 61.8, then push up, right? So this is another move. So this is what I think can happen. So we can get an entry from here. You put your stop loss below 50. You can get another entry from here. If your stop loss gets hit and you don't get in this way, you got to have small losses and big wins. So you can take this trade 3 times potentially, and if you lose one, you're gonna make up for the other 2 in profits. If you lose 2, you're gonna make up for 1 in profits. And the more you lose, the more money you're gonna make regardless. Because let me show you, for example, what it looks like. This is how you're gonna position your trades. So we have this, and your first target, we're going out of this zone. So we don't want to target into the zone. We're going out. We have to break out of the zone. So we're looking at potentially going to 36,000. So your stop loss goes here, exactly below 50%, right? So this is your first play. So this is your first play. So this is a 1 to 6 risk to reward. So it looks like you're risking $10 for $67, right? Or no, you're risking $10 for $6.76. So that's your first play. Second play, if that don't work out, all this you can just use them as orders, so you don't really have to do nothing. So second play, this is what you can look at, right? So you can have this, and your stop loss goes literally below the other one too. So this also is what we call a 1 to 8 risk to reward, right? So you're potentially risking $1 to make $8. You're risking $1 to make $8.34. The first one, you're risking $1 to make $6.76. So imagine you lose $1, right? Now you come back here, you re-enter the same trade, and you make $8. So if you were going to make $6 and you lost $1, so you're left with $5. Then you come in here and you risk $1 to make no. Let's do it this way. You're meant to risk $1 to make $6, and you lose that. Let's say you lose this. Right now you re-enter the same trade, and you're risking $1, and this works out well. Now you make $8. So you see the losses you incurred on this one of $1 has actually been written off on this one. This one you actually made $8. So let's say $8 minus 1, which was the loss you got from this first trade. You lost $1, right? Now you've made $8 on this one. So 8 minus 1 is 7. You're still in the profits. You still made actually more than what you were going to make on this trade. Regardless, you still made more. Plus, if you were going to make $6 on this one, you actually made $7.34. So you made extra 70 or 80 cents on this trade, even if you lost this one. So it's still a win-win situation. That's how you're a little bit ahead of the market. And then if this doesn't play out, you lose $1, you lose another $1 here. That's $2 you've lost. Now look at this. You come in, and because as you're losing, so that means if the market is going to make you lose, or if the trade keeps going down, you're losing. You're actually, as you lose this one, you're reactivating a new trade for another risk to reward, right? So it's a win-win situation. So now look, this is the next play. Next play is this. So same area. So you see how we are just having the same TP-ish type of. So now this is the next trade. This is the next play you can do, and this one is a 1 to. Excuse me. This is a 1 to. This is 1 to 8. This is 1 to 6. This is 1 to 8. And this is. It says this is 1 to 7. I thought this was gonna be more. Because we're going a little bit lower from here. Anyways, it kind of looks like it's almost the same for this one, I guess, because 61.8 to 78.6 is a far fetched like area of putting stop loss. Maybe there might be something in the middle that can make it like a little bit right here to make it make sense, just to have the same type of risk to reward ratio. And 78.6 is kind of a little bit low, steep. But if let's say your stop loss is somewhere here, or we bring it down a little bit, somewhere at least here, just to make it a little bit the same size with this. So now let's measure this so that we'll be all on the same page. So if we can measure what this loss looks like right here. So we put the same loss right here. See, makes sense. Now let's put the same loss right here. So this is where it's meant to be at. Oh damn, I moved it. Oh, let me zoom in. I want this to make sense, that's why. I'm trying to get to something right here, so I want to make sure it makes sense to everyone. Okay, so here, done. We got that one. This is 1. So now from here to here, this is 2. Now from here to here, and this is the other one. So we have 1 to 8.26, the other one is 1 to 7, and this one is 1 to 6. So actually this is the right one. So now it's actually more calculated, because initially I was just free, just doing it freely. Because what we're trying to do is keep the losses constant. We're trying to keep our risk constant, and then the reward can increase. But the risk, we want to, risk the same thing. So if we decide we're risking $10 it is, and while we can make $6, $7, or $8 or $9 or $10, but we will keep risking just $10. If we're gonna risk, $1 to make $6, $7, $8, or $9, the reward can change, right? But the loss has to be constant. That's how you have a better edge in this market. So now I've calculated everything. So we have the first one at 1 to 6, the second one at 1 to 7, the third one at 1 to 8. So it still means if you lose this first trade, you will make up for it on the second. So you get all your profits plus more. If you miss these 2 trades, you'll make up for it right here on the third, because let's say you lose $2 and you make $8 here. 8 minus 2 is still 6. You still made what you would have made here. Even if this trade went well, you'll still make the same exact money, right? So this is how you trade. This is how you have an edge in the market. You just got to find a lot size that works out for you, working with this type of volatility in the market. This type of range, I should say. So imagine you're taking your entries at 29,200. Your first stop loss goes here. What am I going to do? You tell yourself, what losses am I going to use? That the losses, when they come, won't be something crazy. If you're okay with losing $100 to make $800, so be it. If you're okay with losing $1,000 to make $8,000, so be it. If you're okay with losing 10,000 to make 80,000, so be it. If you're okay with losing 100,000 to make 800,000, so be it. You know what I'm saying? So that's just what it looks like. You're just gonna take it like so. This is what I think is gonna happen in BTC in the coming weeks or months. So we just got to track this. For me, potentially, I always have alerts in order to let me know what's going on and where to get in on this market and when to get out. So first alert I want to be putting on is at this 38.2. So this is the first area of alert I want to be aware of. I want to be aware when the market gets in here. So I want to know whenever the market is in here, I want to be the first to know. So I just set an alert there, and I can modify it. I can, say. So I can say. Look, so it's so tiny, so we're trying to get to it right there. Done. So I can say this. BTC is at my 38.2, so buy more. So BTC 38.2 and key level, potentially buy more. So you say buy more. So this actually rings into my phone and sends me an email, and also on the app I get notified that, hey, you said BTC is at this key level. What are you going to do about it? Whatever. So it all depends on what you put out as your alert. So boom, now we got an alert 38.2, buy more. If that don't work, we are still tracking what's going on. We put another alert at 50%. And all this alert actually do get hit. Most of them do get hit. So you put BTC 50% fib, 50%, no, 50% fib level, and support. So 50% fib and support level, right? Because we know the market found an area of support here. This was resistance, and now found support there, right? So this was actually the breakout, right? So actually I need to put here as the breakout. The market broke out here. I'm waiting on that retest. I can put 50% fib and support level. So breakout and support level. So boom. So now we know what happened here. We saw the market has a breakout here, and we're waiting for that retest. So the market can potentially come into this fib level to retest it. Then the third one, 61.8. That's the ultimate golden ratio right here. So we add this alert at 61.8 and we make it 61.8 fib buy opportunity. See, I already have this here. So save. So these are the 3 plays I think can potentially play up for BTC. We can see this happen in the coming days. I'm gonna leave this here on the website, and I will make sure I follow up with it after everything plays out. So next week also I'll be looking at this key analysis to see what happened in this market, and I'll follow up with it as well. And I think that's that for BTC. I'm gonna do another analysis on other forex pairs, but this one is BTC analysis for July the 15th. And alright guys, I hope you guys will pay attention to this analysis and also make your plays off of this one. And I said I was gonna show you guys the initial play I had on BTC, right? So let me just pull that up and show you the plays I had on BTC. Yeah, my BTC play, come on. I know I sent, okay, let me look for it. I know I sent it to myself, so just give me a minute here, guys. I need to find my BTC play. Okay, I think I found it. So before BTC even played out, it was still at 25,000. So anyway, let me transfer this to let me see, I can transfer this up here. So copy, 1 second guys. Alright, so I just copied it. So now this is it here. Boom. So you see what day was published? June 6th. So on June 6th, I analyzed this. Actually, it was still right here. See, so BTC was still at 27,000-ish. It was at 27,000, and I took the sell because I was waiting for it to come all the way down. Actually, my first initial entry was at 25,000. Look at that. It was at 25,000, but then again, I kind of moved it a little bit lower. Let me show you the previous one. I'm gonna save this one and send to myself. 1 second. Let me just send this to myself. Then, so copy image. Then. I just want to show you guys real quick what I mean. So, anyways, that won't be working. So, Bitfinex. So you see, I I actually had see this. It moved from 25,000, right? Look, this was my monthly key level exactly at 25,000. This started pushing up, and look where it's currently at now at 31,000. And initially, this was my entry on June 6th. I planned to get in from here, but for some reason, I tried to be greedy, and I thought I could get in for a cheaper price. So I said, instead of getting in at 25,000, it's gonna make more sense if I get in at 24,000, given the fact that I thought the market will come a little bit into this trend line, touching trend one. I mean, touching the trend line 1, 2, and 3, and also this was my 61.8. So I said this will make more sense if the market comes into 61.8, or at least a little bit around this area. We're going to see the market deep a little bit into 61.8, then we'll see that potential move to the upside. That was my initial thought. That's why I kind of got myself out of not getting in at 25,000, because that would have been the perfect entry, which you can see on June 6th. I actually planned to get in from there because my TP was gonna go even a little bit lower, because I thought it was going to go a little bit lower. So I put my TP right here, but my orders were going to be filled up immediately. It goes to 25,000, and then I was going to ride this all the way up to 36,000. You can see this 36,000 still holds. That's still where I'm trying to push it to. 36,500 is still the same TP. I just kind of pushed my entry a little bit lower, and I was planning on getting at 25,000. But anyways, just back to it. So we see I took the sell going back down here to take the buy going back up to 36,000, and that's exactly what played. So you can see the date I published. This was June 6th, and we're in July. This was before the move happened, and so you see this. That's exactly what just played out. So now we're trying to see what was I doing. This one. So now we're trying to see the market play out just like this. Potentially, we're trying to see any of these moves happen. We'll check back with it and see what goes on. I have my alert set, so we'll just be watching to see what happens. All right, guys, catch you in the next analysis. Next analysis, I will be doing gold or something else, or pound, dollar, or pound yen, or anything else. I think I do a lot of Bitcoin, so I want to start dabbling into some of the other analysis out there too. I mean, some of the other pairs out there. All right, guys. See you guys. Happy weekend again. Bye. Let me close this.